helpful or not that there is a lot of risk-on attitude in the market that is pushing us into new IPOs, into the cryptosphere, when also it is dictated by macro perspective and where interest rates are going? Is that helpful for the formation of new businesses right now?
Oh, 100%. But what's happening with digital asset treasuries in the market, like $500 million new ETH digital asset treasury, $500 million for hyperliquids, for also assets which are not blue chip, coming into the market directly at NASDAQ, now listed, having access, is creating a very interesting buy pressure. For the first time in the history, ETH actually, we have a shortage of ETH available in the market to buy because we have over $4 billion treasuries coming into the market to buy ETH. That's it. And so we are seeing a lot of changes there.
Let's delve into that, because this is the micro strategy, or now strategy of basically being able to hold Bitcoin initially, now moving to ETH, Solana, other assets on basically your balance sheet, using it as a treasury. It's starting to trickle down into slightly more riskier asset parts. I mean, just look at what listed yesterday, Alt5 on the NASDAQ. They've done a SPAC where we're seeing now they're going to be buying up World Liberty Coin.
Yes.
One that you can't trade freely anyway as a crypto. And now they're having a publicly traded entity that's going to be there eventually to buy up a load of that asset. It's got, you know, the Trumps involved, the Witkoffs involved. Is it good to see that happen in your ecosystem?
I think it's good and bad at the same time. The good is that there is an appetite. There are people who are pumping in $1 billion into entities like this, right? So there is definitely a demand for it, which is really good for the crypto market. The downside is, where does the buck stop, right? And so we are now seeing assets which don't even have $1 billion FTV in the market coming in and raising 300 million, 400 millions, and completely going crazy. And not only in US.
From retail investors, who are they raising from?
A bunch of them are crypto investors, like most of the crypto funds, including ours, are now doing a lot of digital asset treasuries. But apart from that, also a lot of retail investors and institution investors who do not have access still, because there is no ETF of Solana, there is no ETF of SUI, SEI. So where do they get access to these? And that does raise a question, hey, is it another pump and dump on the Wall Street, from crypto market to now Wall Street, and who is really going to have a real exit liquidity here? It's still going to be the insider circle or outsider? Or is it the new landscape for it, at least for next 2.5, 3 years, till we have the Trump government?
Kavita, you invest at the earliest stage, at the bottom of the curve, those founded on the technological underpinning of everything we're talking about. But I see Robinhood and Stripe and the bigger fintechs and the banks looking at stablecoin in particular, wanting to do their own thing. How disruptive is that to you? You know, if at that scale, that activity is happening and you have all of your portfolio companies doing something at a different scale.
Yeah, it's very fascinating. Thanks, Ed, for that question, because now we are completely, as an early stage investment firm, we are going into a space where we have demand for so many acquisition of our companies and so many brain power demand. Like some of the top banking CEOs, which 4 years back would not even give me a day, give me a second in their schedule, are now hosting us for dinners, trying to understand how are these cross-chain stablecoins going to settle, how are the money markets and repos and all these yields are going to happen. And everybody wants to do their own stablecoin settlement platform and want to issue their own stablecoin. I have a feeling in next year and a half, not only Circle, we're going to have like 20 IPOs of some of the top companies, Stripe, Robinhood. I'm pretty sure Square going to come on the block for that. Facebook and Instagram will have their own stablecoin. It's only going to be about who's going to have a distribution, and everybody's going to have their stablecoin blockchain platform now.
Okay. More broadly, if everyone's getting into the space of stablecoins, if we're seeing companies being developed and more activity in the space, how do you protect any downside here? Or is it just doing your due diligence, ensuring that you understand how tradable the asset is that you're getting into, and indeed what the future of actually the digital asset is from a project perspective?
I think the fundamental of investing in digital assets will always remain the same: technology. Is it scalable? Of course, now we have a new exit place, acquisitions by some of the top companies. So is it an institutional adoption product? Can the founders take it to, let's say, a top bank and say, hey, we can settle all your repos on this? But the other part of this is, if I just look at the liquid fund, which is doing way better than a lot of early stage investment in the technology platform, just because where the market is today. I'm realizing that digital asset treasuries trend is not done yet. It's going to go, and it's still not there at the peak, because more and more people in Hong Kong market, UK market, a lot of smaller European and Asian markets are now suddenly waking up to it. And that's the demand we are getting. Anything under $1 billion FTV is now going into those Asian markets and completely raising another layer of investments. And that's excites me, bothers me, and makes me very curious at the same time.